Time to talk money and answer questions about retirement and trusts and stocks. That means financial expert Terry Savage joins us. How are you, Terry?
Hey, Terry.
Good morning. I'm sitting here watching the stock market anyway measured by the S&P 500 approach its all-time high. The Dow is also up. The news this morning. People are evaluating whether this tariff thing, which was promised to happen immediately, simply isn't happening, and maybe it's a negotiating tool and all the deregulation aspects. The market's going to have a lot to digest this year, so fasten your seatbelt.
All right, let's get to some viewer questions. What financial information should I save for my taxes, and how long must I keep it?
Taxes, here we go again. Been doing this for a long time. Do you know that tax filing season starts next Monday, the 27th? A reminder that the earlier you file, the earlier you get your refund. The earlier you file, the easier it is to prevent identity theft around your tax return. That's a whole other big topic. And the earlier you file, the less you have to think about it. So this would be a good weekend. It's cold. I guess there's football still, but it's time to start your tax return. Now, officially, you have to keep your information for 3 years. But that's the amount of time the IRS has to audit you, unless and unless. 7 years is the ideal time to keep that information, because it may not be your fault, but somebody you dealt with might be being investigated for tax fraud. I'd keep information for 7 years. If you know you've committed tax fraud or not reported income, there's an unlimited statute of limitations for going back on your returns. But I would say about 7 years. I'd like to add something here because I just posted a new column at terrysavage.com. There is some stuff you have to keep forever. Like you bought a house 18 years ago and you put a new roof on 9 years ago. All the things that you added to the cost basis of your house for one day if you sell it, you need to keep those records. Investments not inside your 401k or IRA, you need to keep the cost basis. And people are pretty good about organizing boxes and files. Then think about California, and all that stuff went up in smoke. So I just wrote a column about something brand new from Quicken. It's not about budgeting or bill paying. It's called Life Hub. And right now it costs $1.99 a month. It's safe, like Quicken, and secure up in the cloud, where you can put copies of everything from your will to your dog's rabies vaccinations accessible in the cloud, as well as keeping the papers in your box just in case of an emergency. So you can read about Life Hub and get it at quicken.com.
All right, here's the next question. What is the difference between a revocable trust or irrevocable trust?
Okay, a revocable living trust is something that's a really wonderful way to plan your estate. It's like a will, except that it gives powers while you're alive. If you had a stroke or went in an accident, you retitle your accounts and you've named a successor trustee, and you don't have to go to court. In fact, there's a great little video that I made at terrysavage.com. Terry Savage Talks Wills and Trusts. It's a common thing, a revocable trust. An irrevocable trust means you're giving money away forever. You can't get it back. Now, wealthy people used to do that to get money out of their estate. A lot of people have been told by lawyers to create an irrevocable trust so they would spend down and qualify for things like Medicaid or nursing care. But a word of warning, once you give it away, it's given. It doesn't get the favorable estate tax treatment. You want to be very careful about irrevocable trusts. But a revocable living trust, a great way to handle your financial planning.
All right. Since Stockpile Now requires you to open an account, is there a good alternative for stock gift certificates?
Okay. Yeah, I used to do stories about buy a certificate for your child, get them started investing. First of all, stock certificates are historic. They're mostly artworks now. Very few people actually have stock certificates anymore, and the transfer agents charge a fortune. So I don't think you want to do that. I think you want to go to Fidelity Youth Account and open a youth account that will be not quite a custodial account if you're trying to get your kids into investing. There is a thing called giveashare.com where you can, for an extra price, get some certificates with the person's name on it. But that's not a great way to go about teaching investing. That's a wall art kind of a thing.
All right. How do you figure out how much money you need to retire?
But about 20 years ago, I wrote a book called The Savage Number: How Much Money Do You Really Need to Retire? Now, there's an entire financial planning industry out there designed to help you come up with that number. But everybody has a different approach. And when I wrote that book, I learned about Monte Carlo modeling, multiple scenarios. Computers can do what no individual can, and give you like a 90% chance or 87% chance that if you do invest this way and withdraw this way, you won't run out of money. Well, the older I get, the more I realize an 85% chance of not running out of money is not a good kind of percentage. I think if you're doing financial planning for retirement, you'd like to have like 100% chance of not running out of money. My good friend Larry Kotlikoff, who I wrote the book, the Social Security Horror Stories book with, has something called Maxify Planning, M-A-X-I-F-I, planning.com. He has come up with a unique new online algorithms that even most firms don't do. And so I would send you there. I get nothing out of that, maxifyplanning.com. A lot of financial planners are using it, and there's a list of planners that you can go to that will help you. But believe me, you've asked the question that, of course, everybody asks: how much money do I need to retire? And stuff like, when do I take Social Security? How do I guarantee income for life? What does inflation do? What about taxes? That's something that you cannot do with pencil and paper. Maxifyplanning.com is one way you can go.
Wait, Terry, I want to correct you because it's maxifyplanner.com. I'm pulling it
planning.
up. No, I'm looking at it here. I don't see Maxify Planning website. I wanted to make sure because it's a typo on our end. I'm just double checking.
I apologize. It's Maxify Planner. I just did it on my computer.
Got it.
Maxify, PLANNER.com.
There we go.
It's really a fascinating tool. It costs a little bit, but I think I'm really sure that this is the best planner I've seen online. I've worked and done some podcasts with Larry on this. That's how I know.
Sounds good. Well, Terry, thanks so much. Appreciate it. Go to terrysavage.com for more. Thanks.
Thanks.
Time now for Around Town.
Hey, Anna.